Hi there, welcome to a market call. Our guest today is the one and only Kim Bolton of Black Swan Dexteritas. And he, of course, will be taking your questions on tech stocks. Now, there is the number. We're looking forward to this at 1-855-326-6266, especially with this rally in tech stocks since December. I think around December 24th was the low, or December 22nd was the low for many tech stocks. Some of them have had a spectacular bounce since then. You can also email us, marketcall@bnnbloomberg.ca. First, though, let's get to some of the stories we're bringing you from the BNN Bloomberg newsroom. Sales and profit in the latest quarter at Ritchie Brothers beat expectations. The heavy equipment dealer brought in revenue of nearly $444 million. The company is trying to get its shareholders to back a takeover of IAA, valued at more than $7 billion. And shares in GFL Environmental trading higher, up around 7%. The Ontario Garbage and Recycling Company beat expectations on the top and bottom line. GFL says it had better than expected pricing momentum as 2022 came to a close, and it now expects full-year revenue to come in higher than current analyst forecasts. Shares in Gildan Activewear trading higher too. Whoa, quite a jump, 6%. Investors seem to be focusing on the company's profit outlook for this year, which is more optimistic than analysts had been projecting. In the quarter just ended, the Montreal-based clothing company missed expectations on revenue and earnings as sales and profit margins were down versus the previous year. And let's check in on the markets. Oil has been struggling today, never good for Toronto. And let's have a look at U.S. stocks. They're mixed today, but of course we have been getting stubbornly high indications of economic strength in the United States. And that has convinced some investors that we're in for quite a prolonged round of more interest rate increases. Let's bring in Kim Bolton for his take on the markets. Just remind me, are techs, I think you sometimes hear techs described as interest sensitive, in that for some of them, their profits and cash flow are years down the road.
Certainly. Thanks, Andy, for having me. Definitely for those that have a pretty heavy debt load, yes, of course, right? Mm-hmm. And also those that are unprofitable, you know, and especially the software as a service side is very, very interest rate sensitive.
Software as a service, why would that be?
Well, mainly because it's a pretty crowded space.
Oh, yeah.
And there are quite a few unprofitable ones.
Right, and so
you can see that over the years. You know, if you go back, really since the whole cycle started, really back in February of 2021, that's when all the software as a service rolled over, and then they rolled over again in November of 2022.
What do you think is driving the tech market right now, apart from the usual suspects, economic worries and interest rates?
Sort of in the technology arena, it was very similar to the rest of the market. You know, all those that really got beaten up last year, people expressed some value in them, and they sort of bought them back, and then it sort of dragged the rest of the market with it. Mm-hmm. But you know, they're all coming back down to earth now. Let's
have a look at a 1 year for the NASDAQ 100 or composite as a proxy for tech in general. So tech really bottomed there in December, late December. I guess there was tax loss selling, might have been a factor. So it's had a bounce off the bottom, but that's been fading lately.
Yeah, and it's interesting. You look at that chart, and sort of in October, and then again at the beginning of November, it was down at that base there. And so, yeah, that's going to be very, very strong support down there. You know, the run up, it's not surprising that you're having, I don't think it's a sell-off. I think it's more of a consolidation that's going on. And as long as, you know, as long as the NASDAQ stays above that 50 and 200-day moving average, I think you can just sort of term what's happening right now as being more of a consolidation.
Okay, well, we're really looking forward to getting your take, and I do want to hear your thoughts on ChatGPT and AI. Have you tried it? Have you had a go?
Oh,
at
absolutely, yeah. I was down at that CES, Consumer Electronics Show, remember? And the place was just a buzz with the generative AI. But you know, Andy, we actually talked about this back in the fall, remember?
Yeah.
No,
AI,
but if you go all the way back to sort of September, October when I was on, and there was a bit of a buzz out there, but you know, the buzz in generative AI has really been going on for about 5 years. But now that you have more data, there's more power in actually processing all this, that's why it's all starting to happen.
It's the amazing thing, because these things learn, don't they? They get better over time.
Yeah.
Kim Bolton is taking your questions today on tech stocks. 1-855-326-6266. We've got an email from Sandeep. Sandeep wants to know about Procore Technologies. What do you think over the next 1 to 2 years? What do they do, Kim, please?
So, you know, it's a pretty sizable company. It's a $9 billion company, but they're purely focused into a cloud-based construction management platform, a software as a service, again.
Okay.
And it offers pre-construction, offers internal, external stakeholders, real-time collaboration, and so on. And it's sold on a subscription basis, so it's actually good for the analysts because they can actually predict, you know, sort of how things are going, new deals that are coming in, and they're profitable. So barely profitable. And it's had a pretty decent run. You know, it's up like 25% over the last 100 days. So now, we don't own Procore, but we do own one of its competitors, a big competitor out there, which is Autodesk. Autodesk, which is that CAD, designing and so on, and they actually have a platform that is actually geared toward construction. And I'm sure Procore is a very, very good competitor to Autodesk because that's purely what they do. So, and the problem with Procore, well, it's not a problem. You can see it's actually traded pretty well over the last year versus a lot of the other software as a service. But, you know, currently trading just around $66, and it's fairly valued. So our price target on it is $66.50. So it's a bit rich.
And what kind of software is Autodesk again, Kim?
Oh, Autodesk does that CAD designing, and it does designings and digital twins and so on. And we're going to talk about it actually in the top picks.
Oh,
when we get to it.
No problem. Sorry, I jumped ahead there.
Yeah.
Okay. Steve wants to know about Lantronix, LTRX on the NASDAQ, and what do they do, Kim?
Yeah. Now, Lantronix is a little bit, well, it's quite a bit smaller. It has about $190 million market cap, and so it provides solutions for video surveillance and traffic management, infotainment systems, robotics, and so on. It's out of Irvine, California. The company's Internet of Things products includes system solutions which provide wired and wireless connections. And it also has a software and engineering services, software as a service, that enables customers to deploy and monitor and manage and automate all of their global deployments through a single platform. For a smaller company that is only about $190 million, currently trading at about just over $5, it has we have a 12-month price target of $7.50, so it has a good runway in front of it.
Okay. We have Bill calling from Bowmanville, Ontario. Okay, go ahead, Bill, please.
Thank you for taking my call.
Pleasure.
I'd like your guest thoughts on Keysight Technologies. I own it. They announced their earnings yesterday, and it dropped like a rock today. I thought their earnings were good, but I would like their guest's opinion. Thank you.
Okay, so these are fancy testing equipment, oscilloscopes, on up from there.
Yeah. And it's actually had a pretty good run. We don't own it in the portfolio, but we do own it in a few of our separately managed accounts that actually have done quite well over the years. So the symbol is
sliding today, though, 14%.
Yeah, and it reported yesterday. Actually, it beat on the top, beat on the bottom, but it actually was a bit shy on the guidance out there. So it provides electronic design and test solutions for commercial communications, networking, aerospace, and so on. Its communications solutions unit provides electronic design, EDA software. It also has a division of Electronic and Industrial Solutions Group. But it's basically involved in measurement, particularly within the semiconductor space. So, you have all these semiconductor companies that actually produce all the chips, and then Keysight is key when it comes to actually measuring and making sure that it's performing as it should do. Their CEO and president, Ron Nourishian, actually, he was the one that actually talked it down a little bit last night because he was unsure about, the landscape going forward. I think it's actually a terrific place to actually buy it here.
So I believe Keysight had its roots in the original Hewlett-Packard.
Yeah.
And Bill Hewlett and Dave Packard started the company in 1939, and their first product was an audio oscillator used, and one of their first customers was Walt Disney.
Yeah.
So it's part of American tech history. Steve in Winnipeg, go ahead, please.
Long-time viewer of the show, dating back all the way to the ROBTV days, and an occasional caller.
Good.
And I'm very thrilled to see Mr. Bolton as a guest today. I'd be interested in Mr. Bolton's take on Twilio and how he sees their role in the expansion of AI, and they declined very badly last year, but their financials seem fairly sound. So I'd be very interested what Mr. Bolton's opinion here. Thank you very much.
So part of what they do is they use real-time customer data to help companies power personalized communications.
That's right. So you can actually sort of call them a cloud communications platform for its clients. We owned it, gosh, if you go back into 2021. We paired it back in February of 2021. We got back in come the summer, but we got out of it early last year. Thank goodness, because this is a great example of one of those software as a service companies that had a difficult time as interest rates were going up. They actually cater a lot to developers that then use the APIs, the application programming interfaces and other software tools, and designing for specific cases to develop in-app communication mechanisms. Thanks to its usage-based pricing, which charges customers every time that they use the Twilio, it actually attracted quite a. It was just a different sort of subscription process.
That's it. So it's not software as a service where you pay a fixed.
Yeah, it's
monthly.
Not a license. You actually pay as you go along, and that's why it sort of captured a lot of the attention out there. So you sort of pay for it as you go. Twilio's enterprise clients, they benefit dramatically from the lower costs and time required to develop customer-facing messaging platforms. To us, we can actually see Twilio grow north of 30% over the next 5 years, and it could reach, sort of $7 billion in revenue. But like a lot of the software as a service segment, you just need to find out when the central banks are actually going to take a pause and let these interest rates sort of take their effect on the inflation front. And then you'll see these software as a service start to take off. That's what happened actually, when in January everyone was talking about the Fed and the central banks were going to actually come in for a pause and possibly start to lower interest rates. Of course, all that went out the window over the last couple of weeks. But I'd keep your eye on this. So it's currently trading at around, I think it's $66.50, and we have a $73.50 12-month price target.
We'll be back with Kim Bolton of Black Swan Dexteritas. He's taking your questions on tech stocks. 1-855-326-6266. Okay, Kim Bolton is taking your questions on technology stocks. Kim, one thing I did want to ask you about, is there any, I don't want to steal your thunder for later, but what about chip stocks? Is what's driving them right now?
Everything.
Right, yeah.
And all the way from certainly the whole generative AI has sort of taken the place of the old crypto, that was actually capturing a lot of the chips.
Yes.
Right?
They used a lot of it. Yeah.
And so because crypto has sort of taken a back seat and the mining in it and everything, but generative AI has popped up. Certainly the electric vehicles, autonomous vehicles is still capturing an awful lot. But that whole artificial intelligence segment is huge when it comes to the chips, but also for not just the processing chips, but also for the power chips.
Okay, so on that note, let's get on to Tony in Toronto. Thanks for calling, Tony. Go ahead, please.
Good morning, Andy. Great show.
Thank
Kim,
you.
I'm curious about two stocks. One of them is NVIDIA, and I'm torn between that and a company called Datadog. Can you help me, please? And thank you.
Okay, well, we're going to be talking about Datadog later. So give us your thoughts on NVIDIA, would you, please?
Yep. It's Tony, it's a great question because, when we approach things like these hypes, particularly of generative AI, it always reminds me of how we actually tackled, for example, Apple in the beginning. We actually, instead of actually buying in, trying to figure out who was going to be the smartphone leader, you actually approached it from the Rothschild version of who are the picks and shovels. The
Yes.
Rothschilds made all their money by selling arms. And they really didn't care whether the English won or whether the French won. They sold arms to everyone, right?
Ah.
And it's sort of like the gold rush of the 1870s in California. So you go after the picks and shovels. And Tony, this is a great example of the picks and shovels are the likes of NVIDIA that actually does the processing for generative AI. We'll talk about Datadog, but Datadog is sort of the data aggregator. And then another one that actually plays into that are companies like Cisco or Broadcom that actually sort of directs the of where the information is supposed to go. So NVIDIA, together with AMD, are really the kings of the GPUs, the graphic processing unit side, which are the state-of-the-art chips out there that actually do the processing, particularly these days for the generative AI. So right now, Tony, NVIDIA is trading around just over 200, 206, 207. We owned it, and then we actually traded out of it last week because we had a price target of 198, and it went through. Once it got within price target, we started to trim it off. Once it went through, we took the rest of it off, and then we actually bought on. Outside of that, we bought Hewlett-Packard, more like a parking space. But you can see what happened over the last few weeks until late last week and certainly this week. It's sort of rolled over because a lot of these tech companies, they reach their price target. The short-term price target is they're waiting for more earnings and guidance to come through. So we actually took some profit on NVIDIA, but we dearly hope that it comes down and we can get back in.
We're going to be back with Kim Bolton, and we'll take a look at his past picks. So before we get into the past picks, I just want to throw up the NASDAQ composite over the past year, just to note that it was a tough time to be buying. Well, it was an inauspicious time to be buying tech stocks last March. The market is down since then, but of course, Kim has a tech mandate. So let's see how his stocks did. Alphabet suffering over the period, down 32%.
Yeah. Google, Andy, I'd have to go back, but I would imagine that Google had to be certainly in our top 10, if not our top 5, a year ago. And it's actually our largest holding, sitting with 8%. You can say, well, Kim, why in the world do you hang on to these things? Well, on the other side of it, we actually have, we have our hedge, right? and short the indexes. So when we lose on the stock, we make on the hedge as it goes up. And so, we know our tech stocks inside and out. We understand the intrinsic value of these tech stocks that we own. And we just dial up and dial down the hedge. But anyway, Google currently trading at about $94, $95, 12-month price target of $121. That's a very, very decent 20-25% runway in front of it. Everyone knows, it has it's really run out of sort of 3 divisions: the Google Services, which has all the Android and Chrome and Maps and Google Play and Search and YouTube and so on. Then it has the Google Cloud, and then it has the other bets. And the other bets also have Google Play and Waymo. So it has so many horses in the race. Now, they had a problem when Microsoft brought out their generative AI the other week, and then they came out with their Bard, which was their version. I don't think it was that much of a mistake. I think they have a lot of horses in the back, and think about it. In the search business, Google actually accounts for 92% of the searches out there, right? Microsoft's Bing is only 3% of searches, and so they needed something, and that's why they got in with OpenChatGPT. So anyway, we still very, very much like it. We think it's very strategic in what they're doing in actually bringing out Bard, which is all geared around this technology which is called Lambda, which is short for Language Model and Dialogue Applications. And this is being tested inside and outside the company. And they've said they're going to release at least 20 more AI products and features this year. So don't count them.
Alphabet has.
Yeah.
Okay. Let's get on to your next idea. And this one dropping, Intel, we know that it's out of favor.
Yeah. So we don't own it. We owned it up.
You got out of it, or did you own it back last March?
No. We actually held it all the way until about the fall.
Oh, but it was a top pick last March?
Yeah.
But you didn't own it.
Oh, no.
Sorry.
We owned it last March.
Oh, I see. Yeah.
But we traded it out of it in sort of September, October. And for a number of reasons, but particularly we saw that they were sort of losing sight. Their expenditures and their CapEx was still very high. They had to do something. You saw what happened today with their dividend.
Yes.
So they don't want to lose on the CapEx, so they had to take a hit somewhere. So that's why they had to pare back the dividends. So, there's a lot of restructuring that is being done over at Intel, but they have to do that to really maintain as being a challenger, particularly to Taiwan Semiconductors, that is a leader in that foundry business. So it's going to take a while for them to actually come back.
We're tight for time here.
Yep.
Sorry, Kim. Datadog, monitoring and analytic solutions. Well, that word needs to be banned in any case, but they're into automation, etc. This stock down.
Yeah. I always look at Datadog as, you know, when you go to a swimming pool, you have a lifeguard. These guys are the lifeguards. They actually direct the traffic within the cloud. And they're a data aggregator. This is why they're so key when it comes to this generative AI. The other players, as I mentioned before, are companies that are involved in the data, in the movement of data within the networks, and companies like that would be Broadcom. And then, of course, as we talked with Tony earlier, about processing power. And that's the likes of like NVIDIA and AMD. Now, for Datadog, currently trading right around $80, and we have $99.75 price target. So it's still, and it's part of our portfolio.
Okay, we are going to take a break. Our guest today, the one and only Kim Bolton of Black Swan Dexteritas, taking your questions on tech stocks. Okay, let's get to some of the big stories we are bringing you from BNN Bloomberg. We got numbers from Ritchie Brothers, which of course is trying to convince its shareholders to back that giant $7 billion plus takeover of IAA. Ritchie's actually beating expectations in its latest quarter, posting revenue of nearly $444 million. That is a lot of volume at heavy equipment auctions. Shares in GFL Environmental up almost 9% after the Ontario Garbage and Recycling Company beat expectations on both the top and bottom lines. GFL says it had better than expected pricing momentum as 2022 came to a close, and it expects full-year revenue to come in higher than current analyst forecasts. And shares in the automaker Stellantis also getting a boost, up about 4%. The company behind brands such as Jeep and Dodge plans to pay out more than €4 billion in dividends after full-year profit hit a record high. Stellantis posted earnings of almost €17 billion, a 26% jump year over year. And let's check in on the markets. The TSX narrowly in positive territory. Now, we did see natural gas shake off its losses this morning. It did move narrowly positive, and of course that tends to support the big natural gas producers listed in Toronto. But natural gas trading near record lows in inflation-adjusted terms. And let's have a look at U.S. markets, and you can see they're pointing up now. So investors who have been worried about this strength in the U.S. economy and higher bond yields feeling a bit better right now. So stocks edging up in the United States. Okay, let's get to Larry in Waterloo, Ontario, a great tech center. Larry, go ahead, please.
Andy and Kim, great to be speaking with you both.
Thank you.
My question is about Airbnb, ticker ABNB. First of all, I was wondering if you could tell me where I could find out more information about the stock. It doesn't seem like it's covered by a lot of analysts. And then secondly, Kim, do you own it? Do you follow it, and do you own it? I'll hang up and listen to your answer.
Thanks very much, Airbnb.
Thanks, Larry. Do we own it? No, we don't. We did. And in fact, we sold out of it sort of when everything sort of popped up last August, and then it got to its price target, and we just never got back in. We've been into to Expedia, and currently trading at about 127. The average analyst out there has a 143 price target. It's very, very cyclical. It's a very, very cyclical kind of business, and so we've just sort of stepped aside as there's this uncertainty in the interest rate environment.
Yeah, we are counting a few dozen analysts on Airbnb, but it's tricky for retail investors. I was working without my Bloomberg for a while ago from home. I think we hadn't hooked up the Bloomberg during the pandemic. And it's tough for retail investors to get information, unbiased information that's not cluttered with marketing.
Well, we have a very robust library. We've been doing this now for 10 years, and so Larry, if you want our version of it, just give us a shout, and we'll send you over our analysis of Airbnb.
Okay. BlackSwanDexteritas.com?
Yep.
Okay. Henry in Nova Scotia wants to ask about an ETF that I think just launched. And a lot of its holdings, well, you take it away, please. Thanks very much.
Yeah.
Henry. Oh, hang on. Oh, wait for Henry.
Thank you guys very much for calling. Andy, I went for a drive the other day. They're getting ready for the lobster season down here.
Oh.
But anyway, anyway, Kim, I heard about Andy's right, and I watched the show on AI, and right at the end, I heard about AIQ, an ETF, and I looked at, and I was blown away by the number of companies in there, and I'd just like to hear your opinion.
Yeah.
So AI, so it's an artificial intelligence ETF, and the top holdings right now, it's very early days, Tesla, Meta, NVIDIA, so they're broad tech names, it seems.
Yeah. So this is what I would do. AIQ, I think it actually came out under BlackRock, and it's a new ETF. So you won't be able to get any history on it. So when I approach the AI, it's sort of like approaching autonomous driving. You can either pick the OEM, the manufacturer, which would be like a Google or a Microsoft, or you go after the picks and shovels, like I was talking before. And so you go after the aggregators. It's all about data, right? Artificial intelligence is basically where we now have a tremendous amount of data, and they're applying machine learning and deep learning algorithms into that to make interpretations. And then the big thing about AI these days is that there's enough data, there's enough power processing that you can put in a number of words, and then the artificial intelligence will actually predict what the next word should be after that. That's what it's all about. And the only reason it can do that is because they now have a tremendous amount of data, and the processing is so much faster. So go after the picks and shovels. Go after the data aggregators, like a Datadog. Go after the power processing companies, like a NVIDIA. And then finally, the network side of it that actually allows the data to traffic around in the cloud. Pick out the names like a Broadcom or a Cisco. That are the kings of those networking stocks out there. So that's the way I would approach it. You can take sort of the chicken way out and go into one of these ETFs, but I think it would be better to go via those picks and shovels.
Okay. Glenn in Etobicoke, Ontario. Go ahead, Glenn. I'm dying to hear Kim's take on this one. Go ahead, please.
Hi. Thank you for taking my call today. I would like to know about Shopify, whether you would buy it, and what price would you initiate a position if you would buy it.
And Glenn, do you, if I can ask you, have you been in Shopify for a long time, the stock?
No, I haven't. I missed the first go around. I've never owned it.
Thank you. Shopify.
So it's had a good run. I mentioned before we actually traded out of NVIDIA, and it was actually Shopify was the other name that we actually traded out of because it actually got to price target. So currently trading at about 47.25. Look at the run that you've had in this thing over really over this year. But it's fallen down from grace from the good old days back in 2021. So I just think it's a bit rich right now. It has rolled over a little bit, but I think you can actually buy it down closer to 50, and certainly buy it at 50 and 45. But I don't think you'd see it much below that.
Okay. Because they seem to have quite the installed base. I think it's hundreds of thousands, if not millions, of merchants around the world.
Yep. And, we have a lot of tech entrepreneurs that are invested with ourselves because we become their eyes and ears into the publicly traded side versus sort of the private side. And it's extremely popular within those SMBs, the small and medium-sized businesses out there.
That's interesting. Okay, Kim Bolton is our guest, and he's taking your questions on tech stocks. We'll be right back. We're tight for time, so we'll get in a couple more questions. Brandon in Vancouver, go ahead, please.
Hey there, I would like to get your opinion on Snowflake. I know that their total addressable market continues to increase with the recent release of Snowpark, increases their ability to run data science tasks like feature engineering, etc., and it all happens where the data resides. Want to get your guest opinion on Snowflake. Thank you.
You got it, Snowflake.
Thanks, Brandon. Snowflake, yes, we own this one. Currently trading just over 151, and we have a 12-month price target of $198.50. This is one of those software as a service companies that is actually profitable. So this is why we own it. We learned our lesson. It was a darling back in sort of the 2021 period. It's been an absolute bargain once you get down to 120. It continues to bring out those new offerings. It is a leader when it comes to, and so Snowflake in its essence, it actually helps the cloud business, and so it just sort of powers the cloud business for a lot of companies out there, and it becomes such a key part of any sort of cloud business out there, and that's why they came out with the Snowpark. So, Brandon, stick with it.
We have William calling from London, Ontario. Go ahead, William.
Good afternoon. I'm looking at buying a stock. The code is Sugar Tom Mary or Tom Sugar Mary, and I'm just wanting your opinion on them, please.
Thanks, William. STM. So they're a Swiss-based semiconductor company, and really their claim to fame is that they are in the business of carbide chips, and so carbide chips are so key because carbide, of course, next to diamonds, is a very, very powerful conductor. It's one of the strongest materials in the world. They've been working on this for years. Carbide chips have been around, but like a lot of things in the technology world, the longer they work on them, the cheaper it becomes. And so it's about 2 to 2.5 times more expensive than a typical sort of silicon chip. But the carbide silicon is key, especially when it comes to the autonomous vehicle business. And so, for example, Tesla has a multi-year deal with STM Microelectronics.
We're going to take a break. We're going to get Kim Bolton's top picks in tech after this. Top pick number one, we've talked about Alphabet, you're sticking with it, and you think if a person's going to own one tech stock, this is a pretty good candidate.
That's right. It's the market is like a horse race, and when you can pick one stable and it's got a dozen horses in the race that are very competitive, it's the right thing to do, right? Search engine. They're the biggest digital advertiser in the world by a long shot. They're the third largest cloud presenter out there. But then on top of it, it has Google Maps. It's got YouTube that they've yet to monetize, right?
Yeah. Well, there are ads on YouTube. Yeah, sorry, go on.
And then Waymo. Waymo is the leader when it comes to autonomous driving. So I just think it's an obvious one. So, yeah.
And their household name, YouTube, is practically the generic term for web videos. Okay, let's get to your next one. Autodesk, we've touched on this. Just remind us very quickly what they do, sorry, Kim, and why you like them.
In the past, I've talked about another company called Adobe, and probably one of the best competitors of Adobe as a design software as a service company is Autodesk. You know, they do 3D design, engineering, entertainment software and services worldwide. They've been around for ages. They do everything from construction to engineering. Currently trading at about 220, and we have a 12-month price target of 260. But remember that it's all about the earnings, and so Autodesk, you know, it said it expects the full year billings to be between, you know, $5.5 and $5.7 billion, and so it's a formidable company out there. It expects free cash flow for the year to be between $2 and $2.2 billion. So this is going to be around for a long time, and we believe Autodesk to have the potential to benefit immensely from, you know, this whole generative AI revolution, and especially when it comes to the 3D models generation.
Let's get on to your final idea here. It's HP. They're in the personal computer business, among other things, but they do the printers, the black gold.
Yeah. So, you know, they're in the business of imaging and printing, as you were saying, but also personal computings. They do a lot of software as a service also. They've been around for ages. This is actually what we went into when we sold out of Shopify and NVIDIA recently when it got up to price target. And then HP actually came up on the radar. And it had a 22% runway, whereas some of the others, you know, they'd already reached it. And so it was a great place to actually park some money. You know, Hewlett-Packard really reminds me a lot of Oracle. Remember, Oracle was sort of the old company, moved very slowly, but we really like what they can do. When it comes to their performance, they've been generating strong cash flows. They have a mature business. They have a stable market share, and it's returning significant amounts back to the shareholders through both buybacks and dividends. And it's also making very solid progress towards transforming toward efficiencies. And then finally, it's very attractive when it comes to the price earnings multiple, which is in the mid-teens.
And it gets confusing because there's also Hewlett-Packard Enterprise, and they do servers and stuff for corporations.
Right. They divided it up a couple of years ago. And so they have HP Enterprises and HPQ.
Okay, which is your top pick.
Yeah, and so the 12-month price target is $39.50.
I mean, I've heard that the printer ink, it's so profitable that it's called black gold. And I think one thing, if you're a heavy printer, one idea is to pay a bit more for the printer up front. And then you get, I think they have tanks, some of these printers, instead of those little cartridge
Yeah,
things.
That's what we have back at our office. And you just buy the tanks. And the tanks are good for at least a year. And we have at least 20 users on that.
And you're saving money versus those little things that you plug in.
Yeah, exactly, and the time and that's involved in all that.
Yeah, it's interesting, but it's interesting how they HP. It's not unique to them, but they put in nosy little chips that can tell if you're trying to use another brand
And once again, this is one of those companies out of California that started out of a garage.
Yes, making oscilloscopes.
Just like Apple and just like Google, right? They all started out of the garages.
I suppose the military had a big presence in California, and that bred a lot of technology. It might have been part of it, yeah.
That's like Palantir, right? That's how Palantir has really made a tremendous amount of money for themselves, and now they're starting to make it for their shareholders, because their main clients actually came from the government military.
Oh, right. Okay, Kim, that was fun. Thank you very much indeed. I always learn so much. We are out of time. Do we have time to look at stocks very quickly? There are American stocks edging up, and of course, we're awaiting those Federal Reserve minutes due at 2 p.m. Eastern Time. It may give clues on how aggressive, how mean the Fed is going to be about increasing borrowing costs. Traditionally, the party pooper, the Fed. Okay, thanks for watching. John Zechner's up tomorrow.